So a quick recap of this week's market action. Certainly we have been seeing markets at the start of the week being pressured, paring back some of the gains notched from last Friday's tax reform hopes. But into the middle of the week, suddenly we have seen earnings stepping up to support the markets. So over in the US, the likes of 3M and Caterpillar had really exhibited very strong earnings for the third quarter, and specifically that itself had reached the Dow Jones Industrial Index, bringing prices up to another record high, and that optimism itself had largely spread to Asian markets as well into the Wednesday's session here in Asia, as we do see a sea of green cutting across Asian indices. This had of course been once again led by the Hang Seng Index with more than 0.7% gain into the conclusion of the 19th National Party Congress in China. But of course a lot of this optimism suddenly came through from the early October numbers, as the market PMI gauge in both the Eurozone and also the US had surged above previous readings and also market expectation. Specifically for the US, we did see the number for manufacturing index coming in at 54.5, and that is the highest number since January this year. That itself had actually really boosted prices. And for the dollar index over there, certainly we have seen prices trading just below 94 level, and for dollar yen waffling below 114. Certainly some strong trend. But for the rest of this week, what are some of the key items that you could really look out for in your trade? Once again, I would think that earnings itself remain at the forefront this week, with over 180 companies on the S&P 500 index reporting, and into the end of this week we have the likes of Amazon, Twitter and Facebook as well, some of the key names to really keep a close eye upon. But other than that, I would say that the trade really remains with currencies market, particularly with the set of leads to come. So as I've mentioned in my week ahead video last week, it's really difficult to formulate a strong opinion with regards to the currency market. But having said that, there's a lot of items that could really bring that volatility for prices. So Thursday's session, once again, we have the ECB meeting. The market will be looking towards plans with respect to the QE extension after their December deadline. The amount that's specified for each month in terms of the bond buying will be something that the market closely follow, and any deviation from the current 30 billion widely expected by the market could really send quite a bit of move to Euro-US dollar. And in addition to that, the US Senate will also be voting on the budget plan ahead of their tax plan that is due on the November 1st. So certainly one another thing for the market to look out for as well. But of course, I think all of this will accumulate on Friday with the US Q3 GDP that is going to be expected. Once again, the number is expected at 2.5% quarter on quarter due to some of this hurricane impact and a slowdown from the 3.1% that was seen in the second quarter. So really focus upon to that number. And for those trading the currency market, although we do know that dollar yen itself has seen quite a bit of volatility coming through from the Japanese election, dollar index really seems to be the one to trade at this current moment, with that range bound trade between 92 spot 50 and 94 level. So do any breakout from that level with the kind of leads that we are certainly expecting this week.